All right, traders, this is going to be a very important lesson. Make sure you stay till the end of this one. I'm going to be breaking down on how I was able to make a $6,000 profit on the day. I did start off in the red with puts for a $5,000 loss, but then after that, I proceeded to adapt and trade with the trend, and I bought call options 4 times, bottom ticking calls at the exact low on perfect dips 4 times in a row, 4 wins, and then I hit puts at the exact high of day at 3 p.m. I'm going to be sharing with you on how I was able to have a 5 winning streak, how I was able to adapt and come out of a $5,000 loss for a $6,000 profit in total on the day. This is going to be a very important lesson, and it is going to show you how to trade and how to adapt and how to master the SPY. In terms of my trading plan, as you could see within my watch list, our levels for puts was the gap. This was the lower level at 437.18, and the resistance was at 438.70. Those were the levels of interest to short the SPY and to play puts. We ended up playing puts towards those levels yesterday, and we had a very successful green day. In terms of today, I noticed at the lower level when SPY came back up, once it filled the gap at 437, there was no confirmation and there was no reason for puts. As soon as the gap filled, as you can see, it just kept trending up on the day. It instantly had a breakout and it instantly formed a floor. Therefore, in terms of trading what you see and reading the price action, there was no reason for puts at our level of interest for puts. You must have more than a plan. You must trade what you see with the charts, not what you want to see. You can have a plan in advance where you're interested in buying puts at, but if there's no confirmation and in terms of what you're seeing, an instant breakout and an instant bottom wick floor at the previous closing price, there is no reason for puts. And if you did end up taking puts in this situation, you get stopped out extremely quickly. With that being said, I did not go with puts on the lower level. However, I did go with puts on the higher level. I was doing puts in the 438s. I was adding a bit. It went about 60 cents against me. I sold those puts for a $5,000 loss. Then from there, I proceeded to wait. We proceeded to wait. We didn't do anything. I had my $5,000 loss, had a couple wins, couple losses after that, and then I went absolutely crazy on calls. Once we noticed there was a clear bullish confirmation and a clear floor above yesterday's highs, towards this 437, there was strong support at 437. It was instant support, which is bullish. And then once we noticed there was strong support at yesterday's highs, this 439 to 438.50 level, we then began our bullish thesis. I ended up doing calls 4 times within the span of a couple hours. And in terms of the calls that I did, they were at the exact bottom of the dips. I did not buy any breakouts. I waited for the dips and I bottom ticked them. Anyone within the chat room witnessed greatness. I played calls 4 times in a row and I had 4 straight wins and I made back all my losses from the morning in terms of puts. The midday session and the power hour session was absolutely fire. I finished up on the day $6,000 profits. And my only trade from puts, after I had my morning losses on puts, my only trade on puts was at the exact high of day. And I'm gonna show you how I was able to do that. I literally alerted puts at 3 p.m. at the exact high of day. That was the only trade I did on puts after taking my morning losses. So the morning session was not good. I started off red 5K. The midday session and the power hour section was absolutely phenomenal. 5 straight wins in a row. So I'm gonna walk you through on how I was able to adapt and how I was able to get myself out of that $5,000 loss from the morning. So first things first, let's get straight into it. As you can see in terms of one of the updates that I posted in the watch list very early in the morning at 11 a.m., I said the only level for puts from here is $443.50. That was the exact high on the day, this 443.50 to 440.50 zone. So that message right there, if you took that into consideration, there was absolutely no reason for puts and it would have saved you. And in terms of the puts that I did in the morning into the 438s, I get stopped out very quickly. Everyone knows, if you've been watching my videos, I made this very clear in previous videos. I said it multiple times. If you look at the daily chart on the SPY, you should be laughing at the bears and you should not be in puts, and you should either sit on the sidelines or look for dip buying opportunities on the calls if this were to happen. And in terms of what it is that I'm talking about, this is what I was talking about. In terms of the SPY, if it breaks above $438, look, this is the resistance level. Look at this. If it breaks above $438, there is no resistance on the daily chart until right here. What's the low of this candle? The low of this candle is 443.50. What's the high of this? What's the high of this candle right here? 445.80. That's how I came up with the next put zone. Meaning, if the SPY breaks above 438 and it's forming a floor towards yesterday's highs, there is absolutely no reason for puts. And this isn't an exact science. Yesterday, someone commented on my video and they said, I heard you say if 438 tries to react as a floor, then, you can potentially buy calls. And they took that trading idea and they lost money. Unfortunately, it was a fake out. We didn't buy calls at that level yesterday. We weren't interested. But in terms of today, once we noticed there was a clear floor at this 440, 439-ish level, we were buying calls and it ended up working out today. In terms of one difference was 438 was like the first time it tested yesterday. It was the first time. It was due for a pullback. It was the first time. Today's the second time. Today was the level where everyone knew to be bearish at 438 because that's where it sold off yesterday. That's what is the difference. So maybe that could be one realization in terms of why that trading idea ended up working out so nicely today is because everybody already knew it was major resistance. So they're going to try to trap the bears on this bullish uptrend. And I didn't realize that right away, but I had a very clear understanding that if 438 to 439 continues to hold, they will take this straight up to the next support level, which is right here at 443.50. This is why if you don't understand price action, if you don't study the daily chart and you hold your losers, you will absolutely get crushed. Like I said, man, it's all in the chart. If it breaks above 438, they will try to send it to the next level on the daily chart. The high of this is at 445.80. The low of this is at 443.50. That's your next level and zone for puts. If you hold puts through that breakout on 438, through that zone, then you deserve to lose a lot of money. And we are truly laughing at you. We truly are, because you deserve it. It's either going to try to have a false breakout and you don't hope for a false breakout. You cut your losses and then you wait for a clear confirmation. If you see a false breakout, get back in with a tight stop loss on puts. If you don't see a false breakout, sit on the sidelines. If you see a strong bullish confirmation for calls, either buy the calls or sit on the sidelines. That's why I made it very clear within my watch list once we identified that 439 was a clear support level. This is why I said the only level for puts from here is 443.50 to 440.50. So with that mindset, I'm either sitting on the sidelines and waiting for my next level for puts, or I'm looking for some sort of overreaction and dip buying opportunity to buy calls. And I ended up buying those call options 4 times on the dips at the exact bottom tick, selling into the rip, making all my losses back and more. And then in terms of how I came up with the zone of 443.50 to 445, you can see right here, if SPY breaks above 438, take the low of this candle, take the low of this candle. On the same day, it shot up to 445.58 when that 438 reacted as support. And then right here, this is a previous support level that was never tested at 443.50, meaning it's going to try to drop at 443.50 to the high of this at 445.50. It's a little bit of a wide zone. You're going to see with the market, it's going to have tight zones and small zones, and then it's going to have crazy wide zones where crazy bull and bear traps are going to get created. And people are so surprised and so shocked that it goes up this high. It's literally all in the daily chart. There is no secret. If you trade the plan and you trade the chart and you trade what you see, you should do absolutely fine. You guys need to understand the market and the chart. This is what it is, man. It does not care. You need to understand the chart does not care. It does not care about your emotions. It does not care about the past trade that you made. It does not care about your goals. It does not care of what you want to achieve out of trading. It does not care about your friends. It does not care about your family. It does not care. You can have a plan, but you need to trade what you see along with the chart and the plan, not what you want to see. I don't care if you want to see a bearish confirmation. Is there a bearish confirmation? That's what you need to understand. Trade what you see. I didn't do puts at 437. My plan was I'm interested in puts at 437 if it gaps down. SPY gap down. As soon as it filled the gap, it had a breakout. Okay, let's see how it reacts. It pulled back. There's a floor at previous closing price. No fucking reason for puts. Why is that so hard to see? Let go of your bias and your emotions. And you can have a plan in key levels, but you need to trade what you actually see at those key levels. And, just because you see something bullish at a level where we're interested in being bearish doesn't mean you buy puts. Maybe you don't like the level for calls there. Maybe you just sit on the sidelines. But if there's no reason for seeing puts, then don't do the puts. You need to trade a plan, but trade what you see along with the plan. If you don't see a confirmation, then don't take the trade. It is as simple as that. But that's how I was able to prevent getting trapped. And then in terms of the 30-minute chart, and I'm going to make it very clear, if you trade the first 30 minutes to an hour at the market open, there is lack of chart development. You are not trading what you see in a sense because there is lack of confirmation. There's no 30-minute fucking candles, and there's just lack of chart. There's lack of trend development. It can chop the first hour and create a lot of bull and bear traps. It can go straight down. It can go straight up. You need to wait for things to develop. All of my big losses come from the morning session. Anyone within Trader Society knows every single time I have a bad trade, or if it's a bigger loss than usual, it's in the morning because there's lack of chart development and it's higher volatility. Higher volatility is going to create bigger losses. Lack of chart development and lack of confirmation, and with that speed of volatility, is going to make it more difficult for you to be making money, and it's going to lower your win rate. Wait for something perfect to come along. Make your trades as if you're coming out of retirement. Make a trade so good where you see something where it's like, man, I would come out of retirement to make this trade. It's worthy of me putting my hard-earned money in this situation. But it's very, very clear, man. Look, this was the red line right here. This is yesterday's highs. Look at the 30-minute chart, man. You have a big green candle on the 30-minute chart. You have a breakout. The low of this is at yesterday's highs. The low of this is at yesterday's highs. This is a bullish wick. What is so hard to see? It's forming a floor on the key resistance level of yesterday's highs. So like I said, man, I also want to give a big shout out to Ninja, man, because Ninja led great direction within the chat. He's the guy who made over $6.3 million on the NVIDIA swing trade calls before earnings. This guy led direction today, man. He bought calls, and I noticed that he bought calls as well. And I looked at the 30-minute chart, and I said, this is super bullish. And then for the entire rest of the day, I focused on calls. And again, the only time when I was done getting stopped out on puts, I was buying puts into 438s. I got stopped out at 439, and then I was done. After that, we did calls 4 times on the dips into all these bullish confirmations. This is a bullish confirmation for calls. This is a bullish confirmation for calls. All these bullish confirmations for calls. But in terms of that being said, how was I able, man, to be so disciplined to wait to do puts and not get trapped and do puts at the exact high of day? Because when I'm telling you, I literally hit puts when I was done losing money on puts. I did calls for 4 times in a row, all wins made my back. And then my final trade was a put option, and it was the exact high of day. You can type it in within the SPY floor. You can visually type it in. I'll type in 443. I'll type in I'm in puts. It should show up right here. Let's see. Man, I forgot the exact. Let's see. Puts. This is going to be a hard one to find, man. It was at 3 p.m. Let's see. I can try to go back to 3 p.m., man. It's just there's so many messages. Maybe if I type, okay, it should be right here. Give me one second. Let's see. 3 p.m. Sorry, guys. There's so many messages. Let's see. Okay, right here, 3 p.m. This was it right here. This was the trade. I'm in puts at 3 p.m. This was the exact high of day on puts. See, everyone was saying no. They were all scared. But anyways, how was I able to do that at the exact high of day? 3 p.m. Literally the high of this candle is when I did it. So first of all, this is a bearish candlestick on the 1-minute chart. That's one thing to keep in mind. Now, in terms of me being disciplined and not doing puts for the rest of the day, it's having a clear visual understanding that if there is a floor at yesterday's high, the daily chart says the next level to try puts is at previous support that has not been tested or resistance. So in terms of your previous support that has not been tested, that is right here. You can visually see this is the low, 437.60. That was the low. It went all the way to 445.80. That's your resistance. What is the previous support level that was never tested? The previous support level was right here. The low of this is at 443.50. They're going to try to either drop it at 443.50, previous support reacts as a resistance that was never tested, or they're going to drop it at 445.50. The reason why I went with that lower upper zone is because just having the understanding of this, in terms of SPY, when it has strong bullish days like this, and it hits a key level where we're interested in puts, and that key level has not been tested. So the level of interest for puts was 443.50 to that 440.50 zone. It instantly rejected 444, so that's a good sign right there. This is a bearish candlestick on the 1 minute. And then just having that understanding, I say this all the time, when SPY is super bullish and it hits one of our key levels for puts that was never tested 443.50 to 445 zone was never tested, our put zone, right? It was never tested. If it happens on 3 p.m., and prior to it happening to 3 p.m., if SPY's on a very strong uptrend, destroying the bears, and our key level for the next key level for puts is tested for the first time, you will typically see a drop during power hour. I see it happen all the time. When SPY is oversold and it's towards key support on a level that was never tested or very strong support towards the lows, it'll typically bounce at 3 p.m. But if it's overbought and it tests a key resistance level that has never been tested for the first time, the most likely outcome is it's going to drop. And that's why I did puts at 3 p.m. when everyone was scared. And then just also having that understanding of strike prices. I say it all the time. When SPY's at one of our key levels, typically, if those options go out of the money, they go straight back to the money. So 444 puts basically went out of the money. 10 cents in the money. They nearly went out of the money. So they're likely going to start to become more deeper in the money. And then that's why I did puts in that situation. And then I called it for the day. In terms of call opportunities, man, I play calls towards the low of this, play calls towards the low of this, plays calls towards the low of this. All these key previous resistance levels, we were looking to react to support. It was a phenomenal day overall. But in terms of the morning session, it was not good. But you guys need to understand, in terms of trading, there is 3 sessions. There is a session for the morning, 9:30 to like 11 a.m., 10:30 a.m. There's a session for the middle of the day. You can say like from 12 p.m. to 2 to 3 p.m. And then there's a session for power hour, 3 to 4 p.m. That's 3 sessions. If I don't do well in one session, then I'm going to have very high standards for my next trades if I make any during the other sessions. And it's just also having the understanding, the easiest way, in my opinion, to make money is to trade the later sessions, whether that's middle of day or power hour. That's the easiest way to make money because the trend is more developed. There is more 30-minute confirmations. Bull and bear traps are already set. The bears got absolutely destroyed at 437. I didn't do puts at 437 because there was no confirmation. I waited until the 438 range. I was seeing some bearish confirmations on the 1 minute, but then it's just also having that understanding where, puts already worked yesterday at 438. And then today happened to be the day where they formed a nice green bullish wick and a nice floor on the 30-minute at the previous highs. It's having that understanding. Like I said, man, I have no sympathy for you, and the market has no sympathy for you if you are going to blindly hold puts into a bear trap. The market doesn't care, man. If you can't trade what you see and you can't have the understanding that it's just a matter of time where SPY is going to go to $444 because this is what the chart says. Like it's not random. The chart says if 438 reacts as a resistance, it has a big crash. If it breaks above 438 and reacts as support, then your next level is 445 to 443.50. Sometimes the chart's going to say the next level is only at 440, not a big move. But in this situation, it was a massive move. So it doesn't surprise me. I don't understand why people are so shocked when these big moves occur because it literally says if 438 reacts as a resistance, big pullback. Yesterday it had a very nice pullback. It dropped like 4 points from this level. Nice pullback. If it breaks out and reacts to support, look right here. It spiked all the way to 440.73. It spiked all the way to 445. There's previous support that hasn't been tested at 443.50. Those are your next levels for puts. Why would you buy and hold puts and not cut your loss and then hold through that through the next level of puts? Are you trying to blow up your account and lose money and take a big loss? Why is it so hard to cut a loss? One of the most successful traders within Trader Society, who's a millionaire, Dimitri, he's the one who put me on to losing small. And what made it click for me is I realized that my biggest mistake in trading was just taking big fucking losses. There was no reason to try to aim for bigger winners. All I had to do was lose less money. And the way you do that is by getting out extremely quickly. This guy trades so fast, he'll be out in seconds. If the move goes against him within a minute, he cuts his loss. If he wins 1-2 minutes, he makes a nice win. And he has a high win rate, and those base hits add up. I have a slightly different style where I hold a little bit longer, typically a couple minutes or up to 3 to 5 minutes. He basically plays like a 1 to 2 bar play. I'll look to play like a 3 to 5 bar play. But anyways, man, it's just having that understanding. If it just doesn't work out, you cut your loss, and then you just wait for the next level or wait for some sort of confirmation or sit on the sidelines. But I have no sympathy, and the market just doesn't care for these people who are going to say that, 438 is resistance, I'm going to buy puts, and then it goes above your level, and you don't get stopped out, and then all of a sudden, like a couple hours later, it's at $440, and then people are surprised. What is so fucking shocking? It's the next level. Sometimes the daily chart is going to say the next level is only at 440 or 441. But in this situation, if you read the daily chart, it's gonna go to 444. That's what the daily chart says. Not every move is created equally. You must study the daily chart and read. Is it gonna have a big bull trap or a big bear trap? What is the confirmation saying? So I would encourage you to trade what you see. And in terms of trading what you see, you need to understand that it's very important to let things develop. Let what you see actually want to develop. If you have a key level for puts, wait for some strong confirmations to do those puts. If you have a key levels for calls, wait for some strong confirmation to do calls. If you don't do that, then just use a very, very tight stop loss. But you guys cannot hold hopes through these major bull or bear traps. This all needs to be prevented. You cannot be trading like a move, man. If you hold your hopes and don't adapt, you're going to blow up the account, man. You need to cut your losses extremely quickly. Just get out of the trade. So those were the points that I wanted to make. And like I said, man, there was literally no reason for puts at 437, so I scratched that level out. And then in terms of this, man, what do you think is going to happen? Big green bullish on the 30, break out above yesterday's highs. There's a floor at previous resistance. There's a floor at previous yesterday's highs. Next resistance on the daily is at 444. It took me until 439.50. 439.30 was my first trade on calls. I bought calls at 439.30. That was my first trade on calls. And then I sold into the rip. And then I did 3 more calls after that into the dip, sold for a nice win. And then I did puts at the exact high of day, and then I called it from that. Those 5 wins in a row made up for my morning losses on puts. And I tried my best to cut those morning losses on puts as quickly as possible. Like I said, it was a 50 to 60 cent move against me on the SPY price. So that's how much my big losses are. A 50 to 60 cent move on the SPY price. Those are my big losses. And those happen in the morning. I'll have 3 morning sessions: morning, midday, and power hour. The worst session in my experience is the morning. And like I said, it's just because there's lack of trend development. It's moving very quickly. There's a lot of emotions to it. There's a lot of bull and bear traps getting set up. There's a lot of chops. There's a lot of sideways move. Easier said than done. There's lack of chart development. So just remember, you can have your trading plan, but you need to trade what you see. Anyone who did puts at 437 today, absolute noob, absolutely stupid. You guys know when SPY gaps down, we don't do puts. When it goes back up to fill the gap, we might do puts. In terms of we might do puts, was there confirmation to do puts at the previous closing price? No. It instantly had a breakout, and then it pulled back, and then it pulled back. These 1-minute candles are pullbacks. But the floor and the low and the bottom of these wicks are above the previous closing price, meaning it's reacting bullish, and there's no reason for your stupid fucking puts. So just remember, trade what you see, man. And I didn't know that I was going to do calls today. I was planning to just sit on the sidelines and maybe miss out on the move. But Ninja was doing calls. I was seeing bullish confirmations on 30 minutes to do calls. And I said, fuck it. I'm going to start doing calls. I trade what I see, man. I don't blindly trade a plan, blindly trade a thumbnail, blindly trade a key level, blindly trade a title, blindly trade the news. I trade what I see. And the only thing that you're going to see is within this chart. Everything's within this chart, man. So just remember that. Trade what you see, not what you think, not what you want to see, not what your plan is. You know, if you're going to trade your plan, make sure there's a reason to trade your plan. Are you seeing a reason to trade that plan? Are you seeing a confirmation? Or is SPY just breaking above your key level, and then when it pulls back, it's forming a floor and higher support above the key level to screw your put options? So that's my analysis on that. Now, in terms of tomorrow, what do we think about tomorrow? So in terms of tomorrow, man, I don't have too much of an opinion on this daily candle, but this is going to be the key levels. So we closed at 442.60. That's going to be a key level for tomorrow. In terms of just understanding, you know, the situation right now. As of now, it tried to turn our zone, our next put zone, into resistance, which is good for the bears technically, but we got to see how this reacts, and we got to trade what we see, man, not what we think. But we did see a resistance reaction at one of our key levels, which was 443.50 to that 444.50 zone. So we're going to look to see how it reacts, man. That's going to be towards the top of the zone. So in terms of the top of this overall zone that we're going to be looking at here, let's take a look. We'll go to the daily chart here. In terms of the top of this daily chart that we're looking at right now, we're looking at 443.50 to 445.80. That's our overall zone. Our lower level is 442.60. So look, man, we just got to trade what we see, and we just got to see how this reacts heading in tomorrow towards this overall zone. If we're seeing bearish key confirmations on the 30-minute chart, then I will likely try puts at those levels. Now, in terms of calls, man, I can't really say too much about calls, but in terms of levels of interest for calls, we can keep an eye. It's just tough, man. It's a tough video to make right now. It truly is. We're in a tough situation right now in terms of where we are within the overall prices. It's more of just you're going to have to be there to see it. But I can assure you guys, Fridays are known for being my best trading days, and I'm going to try my best to crush it tomorrow. But in terms of what I could say, like I said, it's just a very difficult chart at the moment. But what I could say is we're keeping an eye on that 444 to 445 zone for potentially puts. If it does break out and react as a support level, then the next level for puts that we would wait for would be right here. This would be the next best level that we would wait for, which would be all the way at $450. $450, I would put the whole fucking farm on puts at that nice level. So basically, we look for reasons to be bearish at 443.50 to 445. Higher level, the better. If there's no confirmations, we sit on the sidelines. If we trade it, we get stopped out, take the loss, or we win. And then the next level for puts, if it reacts bullish, is $450. That's my thesis on the whole put theory. Now, in terms of calls, it's a little tough for calls. It's a little tough for calls because we're so high in price. We can keep an eye on 439. We can keep an eye on 437, but it's just extremely tough for calls at the moment. So we're just going to have to wait and see and look at our higher levels. We'll be studying 442.60. So our levels for tomorrow that we're interested in looking at is 442.60. We're going to be looking at 444 to 445 and 450. I doubt the 450 hits, but we'll see. We have to trade what we see, not what we think. So that's my overall thoughts. That's my overall analysis. If you do want to be a part of Trader Society, it's going to be the first link down below in the description. It is a one-time fee, and it is lifetime access to the entire program. You get access to the courses, the video lessons on my trading strategies, how to master the SPY, how to master small cap stocks, how to master that unique gap trading strategy, price action, how to trade what you see, not what you think, how to read and trade price action. You also get access to the mindset and the position sizing and risk management part of the course and video lesson library. You also get access to the networking opportunities, the communities, the moderators within the chat. We had a couple mods and a couple of people who were super bullish towards open, but I trade what I see, not what other people see, and I saw things differently, and I took my loss, and then from there I realized it was the move to be bullish, and then I waited for my next best level for puts, and I crushed that too. So with that being said, if you want access to the real-time trade alerts, the watch list, the real-time analysis, all the real-time alerts, it is on the first link down below in the description. I would encourage you guys to join. We're going to absolutely try our best to crush this tomorrow. I will see you guys till then.